Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture with me, Ryan Huang. We are taking a closer look at what's playing out in China. We did get some earnings coming through from some of the big tech giants. A bit of a mixed bag there. What do they tell us about the state of the Chinese economy? And of course, against the backdrop of the tariff environment, where at least the tensions between the US and Chinese sides are starting to ease up to some extent. And helping us out this morning, Kian Soon. He is the CEO of Astral Asset Management. Good morning, Kian Soon.
Good morning, Ryan. Happy Friday. I'm doing great. How are you doing?
Doing good as well. Great to have you on as usual, Kian Soon. Let's talk about what's playing out in China, starting with the earnings. I'm going to give a bit of a recap of some of the stuff we've been hearing from some of the big names. Let's start with Baidu. We just reported overnight. We have slowing advertising revenue. That seems to be weighing down on its share price right now. You have Alibaba missing expectations, but you have, on the flip side, some of the customer management revenue, which it makes from selling marketing and services to merchants, doing well, up 12%. And then Tencent was a bit of a beat on expectations, and that's where they are looking at marketing service revenue growing 20% due to what they describe as robust advertiser demand. So it's like a bit of a mixed bag when you look at some of the commentary coming through. What were the takeaways, Kian Soon?
Indeed, there's a mixed bag. If you look at the recent earnings results, I would say Tencent definitely has one of the more respectable earning results, scoring double digits growth over its revenue as well as earnings, followed by Alibaba. Alibaba actually has an increase on its revenue and is more a turnaround story, but also important to highlight that it has a very strong growth on its cloud services. Of course, it's driven by the AI demand. And even if you look at Baidu with its adjusted earnings declining, it still shows a very strong, robust cloud revenue growth of 40%. So if you look at the overall scenario for the tech sectors, I would say it's actually still very strong on its growth. There are different mixed bags because of different services that each service provider has provided, and some has been a drag for many years. But overall, I think it's a very respectable kind of results for the tech sectors. And we know that this sector has been less impacted by issues like the trade war, because a lot of these tech companies' predominant revenue comes from China.
Yeah, and over the past few months, we have been seeing the Chinese government introducing policies to spur consumption and consumer purchases. But the latest data around Chinese retail sales came in below expectations in April, which kind of highlights the lack of confidence still among consumers. Where do you see things going from here?
So in terms of retail sales for April, year-on-year was a 5.1% growth. It has been slightly fell short of the expectations of the markets compared to 5.9% in March. I think in terms of the overall messages, consumers has remained rather cautious despite all the efforts by the government to stimulate domestic demand. And I'm not surprised given that, April was the month where you have Liberation Day, and a lot of the Chinese consumers who are in the industries of trade and export are definitely feeling more concerned of the impending challenges that they will face.
Yeah, talking about challenges facing China. They've had a few challenges getting hold of chips from Nvidia because of US export restrictions. And we've been hearing from Jensen Huang in the past week saying that these restrictions have failed in the sense that it now forces a bit of urgency for China to go their own way. And Nvidia has now lost a bit of market share. What do you take away from what he's been saying?
If you're a global supplier and your market share in China has dropped from 95% to 50% over the last few years since there are trade restrictions on chips, I'm not surprised that he is not happy. Secondly, I think with all what he mentioned and all the constraints and limitations, it will actually just make China more determined to have their own chips, so that not to be held hostages, as we have seen. And we have seen the emergence of Huawei becoming very strong in terms of providing domestic chips for China. And we are likely to see more innovations coming. For instance, we could see that, even you have restrictions on the mobile phone. Xiaomi has announced a 3-nanometer chip for its own mobile phone. So it's not going to, it's going to slow down China for the time being. But every time you put a constraint like this, it's just going to spur them to be more innovative and to come out with alternative products.
Yeah, I've already seen Huawei coming up with its own operating system to get around its restrictions using Google's Android system. So who knows what sort of success they might find on that front as well. Talking about innovations, Hong Kong has passed a stable coin bill as more governments recognize the digital asset. And we've been seeing as well Bitcoin prices breaking new highs. What do you take away from what Hong Kong is doing right now? Is this going to be providing more tailwinds for Bitcoin prices?
I think in 2024 and 2025, we've seen a big change in the regulatory environment for Bitcoins as well as cryptocurrencies, starting from the United States. We are hearing that by August, the US might pass a law on stablecoin, and we are seeing similar developments across the world. So that definitely creates more tailwinds for Bitcoins in terms of more favorable operating environment. At the same time, let's not forget, right, the recent downgrade of U.S. sovereign debt by Moody has also highlighted that, Bitcoin could be a potential store of value, and there are investors that are very concerned about, the strength of the U.S. dollars. And I could see, that's why they are looking into alternative assets like gold as well as cryptocurrencies.
All right, that new law that is passing through will require stablecoin issuers to obtain a license from the Hong Kong Monetary Authority and comply with a range of requirements, including proper management and asset reserves and segregation of client assets. So more supervision, a bit more clarity on that front, which could go some ways to make it more mainstream. All right, let's take a step back. Kian Soon, how are you approaching markets right now in China?
In fact, we are very positive for the markets in Asia, in particular Hong Kong and China. As usual, our positioning in terms of portfolios for Hong Kong, China has always been domestic-driven companies. We have seen the recovery of consumer counters, even though the results are not coming in, but the operating metrics as well as the fundamentals have been very strong in terms of showing a recovery. At the same time, we also taking a look at the technology sectors driven by the AI demand. We have seen the DeepSeek movement in January, and we are likely to continue to see more new innovations and demand for AI cloud services going forward in the coming years.
Okay, great wrap-up of where things are for China with Kian Soon. He is the CEO of Astral Asset Management. Kian Soon, thanks always for your time and insights.
Have a good weekend.
You too. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.